Good morning, guys. Mike here, aka CryptoJules. Want to talk and go over MTV MultiVac. First off, if you haven't subscribed to my channel, go ahead and subscribe. Hit the notifications button to get notified of new videos. I am not a financial advisor. This is just for educational purposes and entertainment. And just so you guys know, on all of my crypto charts, I use log chart. I don't use linear. I use log, and the reason for that is because crypto moves exponentially, and for me, it's easier to see the move and how crypto, how explosive it is, the given asset that I'm looking at, and it gives me just a better idea and feel for the chart, the price history, and the data. If you switch this to linear, you can see it's quite a bit different looking. So I leave everything in log in order to give myself a better idea of what's going on. So anyways, I'm just going to kind of walk through the way I analyze different assets and different charts. This is MultiVac. I always start on a higher time frame. So this is the weekly chart here. As you can see, I view this entire move basically as a corrective move. This is a WX, YX, Z corrective pattern here that we have on MultiVac. And then here you're starting basically your impulsive leg, which I'm assuming, since we're in a bull market, that this will be, this is the trend moving forward, and it will continue to be the trend until, these 5 waves are up. A lot of you know that my pricing targets on MultiVac are extremely high. I got into MultiVac here on the second wave, rode it up. It went about 4,500%. I sold all the way up. I didn't hold all the way to the tip top, but I dollar cost averaged out and then ended up averaging back in down here on this corrective wave here. MultiVac has already gone up from the bottom about 7,200%. Which again is why I use log chart, because of how explosive and exponential crypto in general moves. I'm anticipating, based on this chart, based on my last video and what we discussed with how waves work, I'm anticipating this thing to potentially go 9,000 to 20,000 more percent. So 10 to 20,000 more percent is what I think it can do. I'm not saying it's going to do that. I'm not saying that's what's going to happen, but that's where it can go. And I get that from my trend-based fib extension. And you can back test that actually by looking at the first wave to make sure you're not insane here. So if you get your trend-based fib extension tool, and I'll have a class or a video on the trend-based fib extension tool and Elliott wave later, but from 1 to 2, wave 3s typically run 1.618 on the fib, which is exactly where I have this. So you got your 1, 2, 3, your 4 corrective here. This is on a weekly. If I move this to a smaller time frame, you can see the corrective wave a little more. Let me grab this back here so you can see it. So end of correction at Z, you've got your first leg up, 1, corrective wave 2 down, 3 up, which hit the 1618 fib, perfectly, your 2 corrective wave down, and then your last leg up to 5, which extended over the 2618, almost to 3618. And then you've got a long correction for your wave 2, which I call a macro wave 2. These are microwaves. So this is 5 microwaves to complete macro wave 1. This is a corrective wave to complete macro wave 2. So now we are on what is going to be macro wave 3, which should be the most explosive wave of the run. Another thing you can notice, or you can see here, is my level. So this is basically on a weekly time frame. This is the all-time high, the original all-time high, which we spiked up, got rejected on wave 1, retraced back, corrected here, and now we're accumulating above the weekly close all-time high. And we're also accumulating at the top of what I see this as a channel. We got rejected here. We've got our support that we used, support in the middle line of the channel. And now we have been, you see the wick here, where we've been wicking above it and we've been rejected above it. Again, this is on the weekly. So we are accumulating right underneath what I see as the top line of the channel. So once we cross that and pop above that, what I see happening, again, based on Elliott wave and a little bit of price action. So you got your first wave up of your micro wave, which is going to eventually be your macro 3. You've got your corrective wave down, your 2. What I'm seeing as of right now, unless this gets invalidated, is you have your first 1, 2, 3, 4, 5, which this is going to make your micro 3 of your macro 3. So that's leg 1. So you're going to pop up out of this channel, probably get to about 4 cents, 3.5 to 4 cents, correct back down as a 2, more than likely, retest the top of that channel, somewhere around 2.5 cents, consolidate, and then our leg up to 3 will be around, I'm saying 14 to 17 cents, which you'll experience some sell pressure there. You'll have your 4 wave, and then your last leg up of your 5 to complete your micro 3 of your macro 3, which will take us up to about 40 cents, in my opinion. This is where I will, well, actually, each one of these levels here is a fib level. The yellow lines I use as the 1618. So it's a 3 of some sort of a wave 3 of a lower degree. So I will actually sell at around 14 cents. I'll start selling around 14 cents, and I will buy back in on wave 4, and then hold again up until about 40 cents, and I will start selling and averaging out up there. And if we get the correction down here, I will more than likely buy back in. I will not go all the way back in, but I will probably buy maybe 50% back and then hold or put a stop loss in, because I'm not interested in losing money, to see if we do end up getting this last and final leg up to wave 3, which could potentially go up to around $2. I will not be in this for this wave 5. If it does get up to above $1, I will be out and I will not get back in. I'll take my profits and I'll walk away. But it is possible. I don't know how likely it is, but it is possible that we do get this final 5th wave you know, and it goes over $2. Or you'll see a truncated fifth, which basically means that it's exhausted. It's way overextended. At that point, the market cap would be, you know, crazy high, and it just would need a lot of liquidity to keep pushing it up. And I don't know if that's possible or not. I'm not banking on it by any means, but you know, I mean, the fibs do check out, so it's from a pure charting basis, it is possible. So that's kind of an overview of how I you know, analyze a given asset. Start basically on the weekly time frame. Lay out, you know, my key levels, which, you know, at this point, if you want to go back and reverse engineer it here, this would be a key level. And basically how you determine your key levels is, you know, supports and resistances. So this is obviously your all-time high resistance candle close on the weekly. Here's your support down here. So that's, you know, you would assume that's going to be some sort of a level of interest from a resistance or support standpoint, which, as you can see, it did wick. It closed under resistance here. It wicked up. It got rejected. You know, and then accumulated right underneath that support. And you continue to do that, you know, down the chart. So here's your other support where you know, your candle body closed, you wicked up, you got rejected, came down here, and this is where the bottom of the channel started for the most part. Pump back up, which is an ABC actually right here, which creates your X, but got rejected there at that resistance line, came back down here, found your support on the bottom of the channel, and then that finished your WXYZ, sorry, WXYXZ, which is a complex correction, and then that's when you begin your impulsive wave up, your 1, 2, 3, 4, 5, and where we found the top of the channel. And then I move basically down on lower time frames. As you can see, I've got the actual each corrective wave and each motive wave labeled on lower time frames. That way I understand what's going on the micro. So hopefully that gives you guys an idea of how I analyze charts, and also gives you an idea of where I think MTV is going to go. Talk to you soon.